Hey guys, Mike here. So I got another jam-packed video for you today, and I'm going to show you, boy, they put us right where they want us for monthly expirations tomorrow, didn't they? I mean, it went beak, right? I mean, to the penny almost. It's insane. I'll show you that, but you know, we're going to go into the debt ceiling, the economic news that came out, which was a lot. The charts to be looking out for, because some of these things are starting to play out, and then the real estate industry. Man, something's got to change because the numbers just aren't adding up, right? And some people are going to be in a real hurt lock if the economy actually does turn south this year. And, you know, starting off with the economic data, let's just get into it. Obviously, building permits came out. Shocker, I can't believe they're lower than what they actually expected. Oh, my God, let me hold my breath on that one, right? And then you got initial jobless claims. I can't believe the, job market is still hot, right? Only 190K versus 214K. Continuous jobless claims, less than what they expected. You go into the Philadelphia Fed Manufacturing Index. They expected a negative 11, so good news. It was only negative 8.9. All right, so let's celebrate that. Got to celebrate the good stuff, right? And the other thing is, we'll see how it plays out. Janet Yellen came out today and said, the Treasury has began using extraordinary debt limit measures because Congress and the White House hadn't agreed on anything. And what that means is, just in the accounting practices, what they're doing here, they're going to suspend new investments into the Civil Service Retirement and Disability Fund and Postal Service retiree health benefits, along with a few other things. And, last I looked, I've looked all day trying to find something. They hadn't come to an agreement that I know of. Republicans in the House, they just took over the House. They want cuts. White House don't want any cuts. And so somebody's got to blink or work together. Again, they hardly ever work together, but this is one of those things where I don't think it can push the market higher because, again, this was supposed to happen, right? But it definitely can push it lower if they don't, get their act together, because I think 2011, the market dropped 7% in one day, right? Now, again, because options run the market, I don't think the market would ever even allow that to happen. But again, it can do that. But this should be a non-event, what it should be. But Washington being Washington is what it is. But I tell everybody, look, spending cuts, no spending cuts, whatever you want to do, there's a reason to kick the can down the road. If you didn't see my video yesterday, there's a reason why we spend as much on defense as the next 9 countries next to us, okay, like China and all the rest of them. Because for every $1 billion we spend on defense, I think it creates 1,200 jobs or something, and they're good paying jobs. It's a total waste of your tax dollars, by the way, because it's not to secure America and the world. It's literally about jobs, right? What are we going to hit? Almost $1 trillion next year if we keep going the way we're going, just on defense, by the way. That's just defense. And all the other things. So, and this is a whole other reason, by the way, that in my mind, that the Treasury market is calling the Fed's bluff, right, on their interest rates, because if they maintain between 5 and 6% on the Fed funds rate, the interest on the debt alone will eclipse Social Security as the biggest line item on the budget, and that can't happen right now. It won't work that way. But anyway, so I put this out last night in the Patreon. I was like, I won't be surprised if the market goes down, just because we're approaching this trend line. We're hitting a volume gap, which of course it went right through this morning. When you hit a volume gap going up or down, it tends to move fast because there's just less resistance. MACD is trying to roll over, RSI is trying to roll over and pass that 50 line. But the big thing is looking at, tomorrow, if you look, or really even next week, will they even let the market fall? Because, when you look here, you're seeing this is not this week, this is next week's expiration, right? Look at all the puts, right? That's to the left right there. And look at the calls. The puts far outweigh those calls. And will they actually let this market fall? I don't know, because that's what runs the market right now. And, some charts to see if they still play out is the QQQs, right? You got this head and shoulders. And to me, that was like a right shoulder forming to me. Now, will they let it go all the way down the trend line? I don't know. Right, because there is a lot of puts in there. There's a lot of bearishness right now, and I can't imagine they didn't let it happen. But hey, that's one thing we got to look for, because that obviously is bearish. We'll have to see. And the other one is, though, Apple. I told people as soon as I saw Apple go green today, I said, nope, we're good. You got nothing to worry about now. The market's not tanking anymore. And of course, that's what happened, right? But you see this trend line, which goes back almost 2.5 years. And you see it got rejected yesterday, right? It's trying to head back up. It did regain 135. It fell below it temporarily today, but it did regain 135. But if it is able to regain, which around 138.50, I think that trend line will be, regain that and turn it back into support, that is a very bullish thing, because Apple makes up such a big piece of the market. And if you're new here, please hit that subscribe button. Really appreciate it. And if you're getting anything out of this, please hit that like and think about sharing the video, guys. And because as you've seen, the institutions just aren't willing to sell it, right? They aren't willing to get rid of it right now. And again, that's not a healthy market when you have one stock that makes up that big of these major indexes and all these ETFs that makes up. Because eventually every king falls, right? Every 20 years ago, whatever the biggest name was, fell. 20 years before that, it fell. And so whenever Apple does fall, it's going to be a hurt lot for the stock market. Maybe that finally happens this year. We'll see. Some people are calling for 100. That would be a very big drop for Apple. You know, all the other generals have been taken out to the woodshed already. Not this one. And Microsoft's still holding there as well, by the way, just FYI. And I saw this right here, and I love visuals. Just to show you, if you thought 2020, 2021 was the year of liquidity, I mean, this just proves it. I mean, look at this right here. Can you spot on this chart for me where you think all the money came into fruition? And because this is IPOs. And just look at this mess from 2020 into 2021 versus all the other years, 2018, 2019, 2022. I mean, look what free money does. Look what liquidity of mass proportion we've never seen did. All these companies coming out, right? And of course, what do you see now? I mean, when's the last time you heard of IPO really coming out? Now, this is why the banks, when they're talking about it, that's why their earnings are hurting, because they're like, there's no IPOs. We can't rip people off, right? We can't make all this money on it, you know, and all that stuff. So that right there, I saw that, I was like, oh my goodness. I mean, that's just such a great visual of the mess of 2020, 2021 that our government did, right? And now, of course, we're having to try to pay the price for that. And, you know, now we get into real estate because something's up, right? I mean, you got the stocks of the home builders continue to rise, but then you got like permits and everything else in the toilet, right? And so what I like to do is look at, one, if we're going to go in a recession, is it going to be blue collar or is it going to be blue collar and white collar, right? Because right now we see the white collar is getting laid off. What about blue collar? Well, if you look, the unemployment rate has risen, right? In September, it was 3.4. And in December, it was 4.4. So some people are losing their jobs, right? You look at job openings, they've been taken off the board. They've come down every quarter. Look at hires. They've come down almost every quarter there, as you can see. And so that's something we need to be looking at. And then, you know, why are homes more expensive? One reason is because of all the money that people building the homes are actually making, and good for them. And you can see in fourth quarter 2021, total compensation 3.5%, wages and salaries 3.8%. Well, and then you skip the third quarter 2022. I don't know what the fourth quarter is yet, and it's up to 4.4, 4.7, right? So it's been going up. And what that really, and that's why you see this right here. This one right here is something to pay attention to. I've never seen a number like this, but U.S. median housing payment as a percentage of median income, right? Because property taxes have gone up, because the values of the houses have gone up, and the interest rates have gone up. And so now people who are buying, and there are people who have been buying this last year, are paying on average like 46% of their income, which you're not supposed to do when you buy a house. It's not good. And obviously, if you look, coming to applications here, it got a huge bump. So some people are applying for those homes. I don't know if they're actually getting approved, but if they are, they're going to be those people paying on average about 46% of their income. And the reason why they're applying right now, and that's going up, because look at what's happened to rates, mortgage rates. This is that, when I say, you know, that the financial standards have loosened and things like that. This is what I'm talking about, right? Going from almost 7% to 6.5%, which don't seem like a lot, but when you do a 30-year fixed mortgage on a calculator, it can be a lot, right? And that's happening in only 3.5 months. And again, this is no big deal as long as the paychecks are rolling in, right? But if we do hit a hard, you know, landing, and obviously they send us into a recession and people start losing their jobs, those folks are the ones that are going to be feeling it the most. Because when you're paying almost half your income just to the house, that's not including utilities and groceries and car payments. And God forbid they let student loan payments kick back in, right? Those people are going to be coming up with some money, right? And if they lose their jobs, that's when you're like, oh boy, you'll run through the savings with a quickness and you'll be out. You'll be back in an apartment somewhere, right? And so that's what can create this snowball effect really fast. If bad things happen. I'm not saying they are. I'm just saying, as long as paychecks are coming in, all of this stuff means nothing. When if those paychecks stop, then we gotta go, woof. And I'll tell you something else, and you know, maybe this is just a coincidence, but when I see this again, right here, came out today, KKR caps withdrawals on real estate trust, right? Not letting people withdraw their money out, just like Blackstone did. Because people are like, hey, we made a lot of money. I want to get the heck up out of there. And they're like, nope, can't do it, right? So, and that's scary, right? You put your money in thinking, you know, I'm going to draw it any time. And they say, can't do it, right? It's like these cryptocurrency. Remember when you try to get your money there, like, No, well, we got cap withdrawals. Wait a minute, the site went down. You know, I always love that one. It's like that's some scary stuff. And this is where the SEC should be coming in to say, what kind of house are you running here? How come people can't sell and get their money back? Why are you capping withdrawals? And they've had a lot of requests. That's what happened to Blackstone, right? And so, you know, again, there's just this big gap between like what these stocks are doing and these builders and stuff, and then what's really happening underneath as far as the housing permits, new startups, everything else, you know, and then of course people just buying. I mean, it's I don't know. Eventually something has to give. Reality has to set in again, and so, you know, we'll see. As far as the market's concerned, obviously tomorrow's monthly expirations. We know how that goes. Let me look real quick because now the market is actually closed and see what they did here. And we ended up at, yep, 388.57. And you know what max pain is tomorrow? 390. So they put us 30 cents off. And that's what I said in the morning news brief. It ain't about today. We got to look ahead to tomorrow to see where they want to put us. Okay, because I showed you all the options expiring. And so, you know, and there's just a lot more puts than calls. And another thing to think about too is because of that, and it's obvious what's running the market right now, that, you know, we keep comparing this to, you know, the .com and '08 and the 70s and all this stuff. But the truth is, I don't think from here forward you can compare any bear market to any other bear market. And we'll do it because that's the only data we got to go on. But because it's been so orderly because the options are running this thing, right? Because they just won't sell us off. That's why you can't have this capitulation moment, it seems like. And, you know, if that's the case, then I don't know. I mean, what do you do with that, right? I mean, because you look at any other bear market. I've looked at them all. I've drawn the lines, the trends, everything else. None of them have been this orderly. None of them in the history have been this orderly. And you've seen it. It's a nice little pretty picture. I showed you one. I showed you yesterday, right? And so if that's the case, they just won't let us go down until people get super bullish, maybe. Then, yeah, I think going to October lows is almost going to be impossible. I'm going to start looking farther out to see what we look like. And then plus with these same-day options expirations, you know, that's affecting things too. And so it's just the most manipulated market, you know, and that can be in a good way and a bad way, I've ever seen. I watched, have you guys watched the new Netflix special on GameStop and all the stuff behind the scenes? And they actually interview people like us who are in it or not in it, and then, you know, how much money the people on Wall Street actually made, because that was the whole thing, to kind of take it from them and give it to us. And instead, some people did make a lot of money, but the poor folks that got in probably like $150 and up, they got destroyed, right? And so they interview some of those folks too. But then they look on Wall Street and what Citadel and them made and the whole thing. It was just crazy amounts of money, And I'll never forget that day, because I remember I had this channel and people were like, where's the buy button on Robinhood? You remember that? Where's the buy button? And everybody said, oh, it's because Citadel made them do it and all this stuff. And they said, well, no, we shouldn't have enough money or whatever. And who knows what the deal was. But people lost because, remember, the stock just tanked. And a lot of people were at work not paying attention. And when they got home, they went, what the heck's going on? And, you know, but this kind of reminds me of stuff like that, where you just like, I mean, I'm seeing it every day. I'm looking at the options flow. I'm looking at max pain. I'm looking at these ranges. And we're just, you know, talking about it. And it's like, man, this market is just not being allowed to go where it wants to go. And it's not freely moving. It's whatever. Okay, there's a lot of puts over here. Nope, can't go way down. Oh, a lot of calls. People are bullish. Can't go way up. And so getting to the October lows, man, like I said, unless something happens, unless earnings just come in absolutely catastrophically horrible, I can't even imagine. I mean, it was slow bleed out, but I can see us being stuck in a range. I don't know what that range is yet, for quite a while is what I see. So let me know, you know, obviously something has to shake out eventually, but let me know on the bottom, you know, what you guys think and stuff. As far as, you know, what you think about this market, what do you see going on, where do you think we're heading and stuff. So, you know, I'm not surprised looking at some of these, because right now the charts don't look super bullish for the short term, but right now the bulls are still in charge right now, right? They're still there. As long as there's certain trend lines and everything, they don't break, they're still in control, right? And if these earnings turn out to be really good, because remember Netflix is reporting today, I believe, if they turn out to be really good, especially the mega cap companies, they are a lot better than people expect, then boom, you can just see the market try to move up, because what I showed you, a lot of puts, not as many calls. So there is, to me, a lot easier to move up than it is to move down right now, at least for the next 10 days. So anyway, Hope you guys got out of it. Hit the like and subscribe if you did. Let me know your thoughts and stuff. I always like to read the comments. And I'll see you guys tomorrow.